All right, Adam. Hopefully you can hear me because this is the second time I'm making the video because volume issues. So shared ownership and mortgage. I thought about just making a video because it might be easier for me to explain things. Now I'm a mortgage loan officer, so by no means I'm no expert on this kind of share ownership stuff. However, I'll tell you my experience with it. I make phone calls. That's what I do. I'm a mortgage loan officer. I pull people's credit. I check people's credit just to see if they qualify for a refinance. So the first time I heard of this kind of arrangement is when I pulled credit for this gentleman, and he told me, "Yeah, I mean, I want to refinance my home." And I'm like, "Okay, I mean, yeah, definitely, we can put a loan estimate for you." However, when I pulled his credit, the mortgage was not on credit. Like it was a weird thing. Normally, what happens is when a mortgage is not reporting to credit is because they file for bankruptcy. That's one of the main reasons, either Chapter 7, Chapter 13, or whatever that is. The lender has stopped paying or reporting to credit, and now you're kind of on your own. So when you make your mortgage payments, they don't show up on your credit, you don't earn points. It doesn't, there's a lot of different factors that affect your credit, of course. But anyway, so I couldn't see his mortgage on the credit report. So I asked him, like, "Are you sure? Are you in a lease to own agreement, rent to own, lease with the option to purchase, whatever you want to call them?" And he's like, "No, I am the owner." And after asking a few more questions, he's like, "Well, I bought a portion of the home." I was like, "What do you mean?" And he said, "I have a share ownership mortgage." And I had absolutely no idea what that means or what he was talking about. And probably, as you already know, all it is you're buying a portion of the ownership of a home. Apparently, this would be like the mortgages 2.0 for investors. And I believe that they mainly apply to real estate investors because they are truly the ones making the big bucks, I think. So when you buy a portion of ownership of this specific property, you also got to make rent payments. And I'm assuming you also got to pay some kind of interest rate. And you can buy, I believe, as low as 1%. And then there is tiers. So you can keep purchasing more. You can keep becoming more owner of the home, if that makes any sense. And I believe there's a limit of how much of an ownership you can own. And when you reach that limit, I really don't know what happens. But that right there was the main issue why we couldn't do anything. I mean, when you refinance, you got to go through title. And the main reason you go through title is because you want to prove that you are the owner of the home 100%. You don't want to have any liens. You don't want to have any extra owners that they claim to own your home, anything like that. Any spouse that you divorce, and you want to have a clear title. That's why when we finish the process of refinancing, we always say, "Hey, do we have the clear to close on the title?" And of course, a share ownership mortgage will never pass the requirements for a clear title. The main reason why is because, I mean, we never how can I say this? I never went that far into the transaction with this specific person, just because I mean, I'm not in the business to waste his time, waste nobody's time, waste my time. But most likely, I don't know how title will look at it. Probably they would see like, "Hey, there's like 100 liens on this property, and each lien owns 1% of the home." Or or maybe there's no liens, but how are you able to prove that you're 100% owner when there is lots of owners? It's kind of like the same thing of a manufactured home. Those big parks of manufactured homes that you can take your home, your trailer, or whatever, rent the space. Well, almost no lender will loan money to those for those specific homes. The main reason why is because of the land. You're renting the land. You're renting, sometimes it's like a co-op that you are owner with so many people, and you are not owner of even the home, or you're not 100% owner of anything. So that's my personal experience with it. I know that they are pretty big in Europe, in England, and they're apparently moving this way, coming this way. I mean, the concept is really good. I really think that in order to be able to, um, the how can I say this? Banks look at it as a very risky paper. They're not gonna touch something that if you gotta go on foreclosure, if you gotta recover that collateral, you gotta go through 100 people just for 1%. And what about for the other 99% of the people that own the home? I mean, that wouldn't be fair to them if 1% of the ownership doesn't pay the mortgage. So I'm assuming that if you want to do any kind of refinancing or any kind of sort of creative investment, you're going to have to deal with one specific company who makes the rules and is not supervised by any government agency like FHA, conventional VA, USDA, and those kind of mortgages that we have these days are. Like I am, I have a license and I gotta abide by the rules of the government, or otherwise I lose my licenses to do business. Anyway, I hope that answers your question, man. Yeah, thank you for watching. And for everybody else that is watching this video, my name is Isaac. I'm a mortgage loan officer that works for Nations Lending, located outside of Cleveland, Ohio, in a city called Independence. Thank you for watching. You guys have a great day. See you. Bye.